Hey, hello everybody. This is the professor with Day Trading for Success, home of the $1 Million Margin Club. Today I'm going to be showing you the Tradingview Scalper Indicator script. So you can now get that yourself. I've gotten a lot of help from the community. Specifically for that was Justin, who really brought that home by providing the script. And we've been working on tweaking the original script for Thinkorswim, and we've also been testing it all last week. I haven't even released the videos yet, with huge success for this scalpers indicator, which is right down here. You can see it right here. The other thing we're going to be doing today is I'm going to actually make this entire layout available. This is not just the perfect scalping layout. This is the perfect RV scalping layout. So this is what we are now using in our competitions because we've tweaked it so many times. And the book is getting, I know you've been hearing about the book forever, but because of the book, you know, it had us just keep tweaking to such an extent that we got the most unbelievable layout. So this is the layout. I'm going to go over it with you. I'm going to make it available to you as well. So those are some of the two main things I'm going to be doing in this video, as well as laying out the RV strategy from scratch. So it's going to be a long video, but I'm going to divide it into sections that one of my community taught me to do because I was so ignorant about how to do it. But anyway, so that'll make it easier for you guys if you don't want to watch something that you already know. Although the strategy, the RV strategy that I'm going to lay out today is not something you have seen before. So it might be worth taking another look at it, because this is ultimately what will be put out in the book. And because what we did last week is everybody had, it was like a 6-hour meeting of the minds, and we went over what was working with back testing, and we basically brought back in some of the things we weren't using that we think is really vital for the success of the maximum success of the RV strategy, which is a range-bound strategy. But before going on any further, let me just do a couple things here. Let me make sure that you've got you guys know I'm not going to be doing live trading today. As you can clearly see, I'm on sim. I'm on demand today. I actually have it on pause. Haven't been on this in a little while, but you can all this layout will work for you like it wasn't on a sim trading. So anyway, please read this. This is an entertainment channel only for teaching, and we are not licensed financial advisors. So if you take any of this information and you go out there without seeking somebody you trust, that's a bad idea. As with any YouTube channel, you don't know me, you don't know anybody, and you really need to learn this stuff yourself. So hopefully we can cut down on the curve a little bit, but that's just our sole purpose, is to do that. And with the community, with all the comments, it's been really helpful for everybody picking up where I can't answer, just helping everybody as a community. So really appreciate that. Okay, so hopefully you've read that. Now the exciting part. So those of you that have been waiting and didn't fast forward, this is what it looks like on Tradingview. All right, it's almost exactly the same, which is really cool. All right, and then this is the script. Now, unfortunately, you're not going to be able to copy this. You're going to have to, this is a picture of it. You're going to have to type it in. So there was no way I could put it in under my description, because it won't accept all these little symbols and things. So you have to copy this. Maybe somebody will copy it, type it all in, and make it available on Tradingview in a way that that I can't really do through Thinkorswim. But this should work exactly the same. So hopefully you can pause your screen, and I won't leave it up here, and you can get all that information, or take a picture of your screen, and I'll go back to what it looks like here, which is pretty cool. So I don't have Tradingview, so I wasn't in, and it's a weekend right now, so I wasn't able to even see this move. But I'm pretty sure it's going to move accurately with the percentage. And what I've been doing the last week on the Thinkorswim version, so I'm going to go ahead and take this down, guys. So make sure you take your pictures and everything else that you wanted from this. And I'm going to get this over here. I may come back to it later, I'm not sure. But what I've been doing on the Thinkorswim version is I've been, let me open it up here. So this is it right here. Let me go into the sources. So guys, this is all available. That's how you get to the script, if you're wondering. That's how you get to the script. I went over this in another video a while ago, but probably you haven't seen it. But you, when it's on your, when you get this layout, you're going to get it, okay? And then if you right-click here and go to Edit Sources, you can see the actual script. So you can, you know, if you want to mess around with it, make your own changes, you're welcome to do that. That's up to you. This is a community share. That's the way I look at everything I do. And just to help you out, we're not charging for it. You can have it for free. So, and this also shows what else is on my chart. And I wanted to go in about this one right here. So this is somebody from another helper that really, he saw how I struggled every day. And this is going to be good for everybody. So I really appreciate that. That was Wojak. He created this 5-minute grid thing. And this is a serious script. This is a lot of typing. This goes on a long time. But anyway, that was really cool that he did that for me. I really appreciate it. And now it's going to be available for everybody. So, and that's the grid right there. It's showing. So what that does is it makes sure that there's always going to be, no matter what I do on my screen, no matter how many times I expand it, there's going to be 5 candles within those 2 lines. And why that's so important, if you haven't seen any of my other videos, there's a lot of people, this is a 5-minute chart over here, only trade on a 5-minute chart. And they wait for the candle to move, you know, change color, or I mean, they do a lot of different things, but a lot of times they're going in or going out, entering or exiting a position is based on what happens right at that 5-minute close. So knowing that when you're on a 1-minute and you're waiting for a move, you know, to either to stay in a move or maybe get out of a move or just start to go in a move because you happen to be aligned with the 5-minute. I mean, I recommend those people that have can only trade 3 times a week and they're trying to work their way up to the 25,000 so they can margin under the PDT rule, and then they'll have $100,000 to margin with, which is then you can trade most anything I trade. So remember, when you see the $1 Million Margin Club, what that is that's people that have worked up to $250,000 in an account and they can margin 4 times. So they have $1 million of buying power. That's what the $1 Million Margin Clubs. They all don't have $1 million. They have $1 million of buying power. So there's a big difference there. But the way they've been going, they're getting up there, you know, but most of them, and there are certainly some that do. But yeah, so waiting for a perfect alignment is so important when you are, you know, you're trying to slowly build up look, it's important for, even if you're not slowly building up, if you can have the patience to wait for a perfect alignment, you're going to probably get a winning trade every single time. You know, obviously, no, I shouldn't say every single time for anything, but if you're careful and with the tools that I've given you here and the education, and then your own education and your own advice from your own financial advisors, and you just stick it out and have patience and wait and do 1, 2, maybe 3 trades a day at the very most, or 1 trade a day, and then you can do 3 trades a week. You know, you can slowly build a 1,000 or 2,000 or 5,000 you have in 3 months, 6 months, a year. You can get up to that 25,000. That's what so many people did. So many people have done, is to slowly build it up. So you're not alone starting with a low cash size, but you have to have the patience. You have to look into the future and say, where am I going to be 5 years from now, not 5 months from now? So you can, you know, you take the baby steps, be careful, and build that account up, you know, and so in a more conservative way. Now, what we just talked about on TradingView was this amazing scalping indicator. Anything that says DTS is part of the Day Trading for Success custom scripts. So this, which I have another video about, I think just before this one I made, basically talks about how amazing this is. So I'm going to go ahead and take it off pause for a minute and just play. So this is Meta. Yeah, I haven't watched this in a little while. Yeah, so you can see these moving here. So the red is representing the sellers, the green is representing the buyers. And then what I found out, guys, over trading this last week with the $1 Millionaire Margin Club, $1 Million Margin Club, sorry. We've been realizing this is really primarily a momentum scanner, which is really perfect. So our best success has been watching these percentages change, right? And then watching them build up. So see how that's building up right there? It went from 5, 10 to 20. We would have got in right there as a momentum, and then we wouldn't have overstayed our welcome. We would have got right out if it went up like 5 to 10 cents and just rode that momentum. So it kind of stalled there, but I didn't actually look at the price when I said go in. But it stalled there a bit. So if it doesn't take off, just get out. Get out and you lose a few bucks. But if it does take off, then let it go up a little ways, and then get out too. Don't just hold it when it's up 30, 40, 50%. Now, my advice is, you saw me short it, go long, short, go long. I mean, that's way more advanced type scalping, to write it up and write it down with the speed of this and trying to do it versus this. There it goes again. We would have gone right in on that one. I would have gone right in on that as I watched this go to zero and that go up. So, and then I would have been holding it right now, and then I would have made some. I would have already made money right here. So this told me to go in. I mean, this isn't as definitive as I would like to show you an example, because here it goes back down. So right here, I'm probably breaking even by these trades. And if I was going short, of course, I would have more of an opportunity. Now, this is kind of goes against the RV strategy. So there's sort of, I'm teaching two different things here. This is a valuable tool to trade, to do fast in and out scalping. And it is still extremely valuable for the RV strategy. But as you've seen me in the RV strategy, I will hold and I will be patient, because your risk management is within the channels. That's your risk management, right? So you figure out how big that channel is, and then how many shares can you carry to make that distance of 30 or 50 cents or 15 cents to hold it the distance without getting emotionally, traumatized. Like I gotta make a move, I gotta get out or whatever. You have to be able to have the share size low enough that you're okay to take that hit. And I actually say on your trading plan that you should have it, I can lose $5 a trade. I can lose $10 a trade, and that's it. And when you see this up here, read red, $10 or whatever it is, then you get out immediately. So these are just little things. You've probably seen me do it, but you really need to set your assess your risk per trade. And if you have like 3 red trades in a row, I mean, if you have made the PDT rule and you have 25,000, you have 3 red trades in a row, you probably should just stop for the day. And you've lost 15 or 30 or $50, and you're done, and you're going to get it back later in the week. When you're doing a little bit better, don't press it. Something's wrong. Have other things going on. That this is not what you need to do, and just sit there and just get worse and worse and worse. All right, so let me go over this layout with you, and then this will be available for you. So this is what I call the perfect RV strategy layout. And then, then I'll show you how to mark up the RV strategy as well. So this is a 1-minute chart. And the only thing I have on this 1-minute chart now is the new scalping indicator. It's all I need, because it gives me the volume of the last candle that just passed, the existing candle that's moving, and then this is going to tell you whether you should go up or go down, and this is going to tell you the percentage-wise. And then I did have the seller's indicator for the first part of the week last week. I was so used to reading not just the fact that the sellers were the only thing marked on it. I was very used to reading the patterns, but the same patterns are here. So I kind of just block out this green line the way I'm trading it now, and I watch this. But then I look at the same patterns I did, because this is a histogram, just like these 1-minute candles up here is a histogram. And you can read that these are this is a volume, right? But you can know what this is doing when you get used to it if you're just reading this. So on my actual, when I'm trading, it's actually more like that for me. But it takes a little while, and I already had a leg up by really knowing the seller's indicator, which is, you might want to have them both up, when you first start. But I'm showing you how we trade it now. Okay, so then as we go down this plane, I have the day. This is the day chart, and on the day chart, I have the ADX, so this custom script's going to be available for you. This is going to tell you which way the market's trending in here, and how to read that and everything. So this is pretty handy. And then I also have the ATR down here. Now this is a vital part of being on the day chart because I need that number. So that's the average true range over a 14-day period. So I have to have that number in order to figure out the RV strategy. And the RV strategy is basically based on, you look at yesterday's close, which I believe is under my picture here on this chart, but it says the close yesterday. You just hover over the candle if you're on Thinkorswim, and it will show you the close up on the top of the chart, $133.23, 22 cents. No, 23 cents was the close of that candle. This is today's candle already moving. So then you take your ATR, you divide it by 2, okay, and then you subtract half of it after it's been divided from the close down, and then half of it from the close up, and you create your 2 ATR levels. So I would do something like this. I would do the math. I'm just going to round it up for today. So let's just say it's 252. Let's call it like 280, right? Say 285. So 285. I had to make it hard for me, right? Let's just say, so it's 379. So we'll call it, I'm going to make this close. I'm going to call this 131 on the low side. Let me just make sure that's right. Yeah, so this would be roughly around there. Let's just do that. So then you go into your lines, you edit the property, and you say, let me cap it, ATR. I'll go ATR high first. And then I want the extension on, right? And then I'm going to make the high green. And then I'm going to put in the price, which is going to be roughly $3, not quite $3 up from the close, which was 133, I think I said. Let's just call it 136. This is not exactly even, okay? So let me just move this. What was it? So the close was 133. So 136.23. So 136.23. Sorry, my microphone's in the way of my... and then I usually make that like triple wide. And then there's your ATR high marked, all right? Then so you can start with these lines anywhere. And now I'm going to go the ATR low. And I'm going to add $3 to that close, which was, I can't remember what it was, 133. I mean, subtract $3. So 130.23. I think that's what I said it was, guys. I'm just not, obviously I'm not going to be trading this on an on-demand thing, so I'm just trying to get it up here. So then I extend it to the left on. Now I've created, and that's every morning when after I scan, I use the scanner. Now, you know, there's a whole video about how to do this, but you want to scan first and make sure the scanner's set up. Make sure you go to my scanner thing. Make sure the scanner's set up for an ATR rating of 5 or above, 5, 6, 7. The higher, the better for trading. Now you're only going to trade the RV strategy within this channel, okay? So this goes back, you know, for whatever, but this is today. Well, this is a daily chart. So that's how you start, and then you mark everything else in between there. So we'll continue to go over. So what I have down here is I have 4 hour, 1 hour, 15-minute. Then I have level 2, the ladder, and then the active trader. Here, what you don't normally see me have up is the time and sales. Now, we do use this when we're using this scanner on momentum. Sometimes we'll break into a momentum trade on the 1 minute if it's doing some really hard back and forth in the channels, if it's really banging back and forth really fast on a small channel like what we call them, the micro channels. Then having this information when you're only moving 4, 6, 10 cents, having this open can sometimes help to see if there's big flushes of green. Like, you're not even trying to read the prices, right? You want this set tight, so on a 1 minute. So you see big flushes of green, big flushes of red. It's, again, helping you along with this, we've been finding, gives you a little bit more confidence to make that move. Or you start to see that a bunch of sales just happened and you're in a position up and it's registering around the same time and you see a big flush of red. It's like, get out. You know, it's helping you. One more thing, one more edge. So we'll use that. But typically you won't see me do that because I'm not doing momentum trading for the RV strategy, although with the advent of this new scalper indicator, which is it's doing wonders at the open for trading as well. It's actually a momentum scanner for Thinkorswim. It's pretty incredible. By mistake, reading these percentages, which of course are taking the information after the transactions are done, moved over to the receipts, the time and sales, and then bumping them over to a histogram, and then the histogram's reading the histogram, and so on and so forth. Now, I've spent a lot of time with ChatGPT having, making sure it could explain to me the nuances of this in case it was not what I thought it was. So it's quite interesting when you really, because at first I downloaded the script, and then it would only, it won't read the script if you're familiar with it at all, unless you really prompt it to say, because if you give little prompts about, hey, this is how this works, then it's just going to do it's just going to analyze what you say 10 different ways, 20 different ways. Probably most of you are used to that with ChatGPT. So you have to get very, very specific asking your questions. And then it starts to contradict itself. So I've done this. There's a certain part of this script where the time frame that it's judging these how it judges everything. I've moved that time frame all over the place, and I'm having a really hard time having it change what's shown, no matter where I put the time frame. So maybe some of you that are doing a lot of scripts we can talk about that via email. If you have an idea of why that's happening, that would be helpful. But what I'm not going to discount is the value of the 1, 2, 3 green going up to 8%, 16%, 24, 30, jumping on that wave is very effective. It can turn around quick, so you got to be able to get out. But seeing that wave in your face while you're reading everything else, there is a whole nother move in there that can be part of the RV strategy, but you can also adopt it to any kind of scalping. And that's why I named it the scalping indicator, because and why people are probably going to adopt it on every platform out there. So whether or not you agree with how it gets its readings, some people might say that's useless, and other people might say that changed my whole life. So it's just how you use it, Anyway, so then over here is a 5-minute chart, and I do have a regular volume indicator here, just to watch regular volume. And we're going to go into some of the other things that I have up here too. This is the volume profile set on the right. You don't normally see me do that either. And we have found with all the people testing that this sometimes comes into play, these cliffs, these drop-offs, the point of control being where you can see it here. So this is set on 10 days, right? And then the one I have over here is set just on 1 day. So you won't even see it. You don't even see the unless you go further back here, you'll see the action. Wow, how far back is it? Well, there's one of the lines there. You just can't see it because I've lightened it up a bit. But if you go auto zoom, so you can see it sitting back here because this is just a day back. And that's where all the action is going, where you see that light blue come up. That's where most of the price volume is, why the price is taking place at that level. So, knowing that, because everything's, will it happen again? It just happened. Is it going to happen again? You don't know the future. You only know what just happened. And then you're trying to make your moves based on that. So the more of how you can read what just happened on the most indicators that are, and there's a lot of indicators out there I find useless, I have to tell you, but to each their own. But the more that you find that line up that you find that you respect, the better chance you're going to have of trading. So remember, you can lock these things up on the top of your charts. You can lock these, and then you have everything you need. I say I don't have here's the Fibonacci's over here. And I don't know why this just did that. So this is I'm not gonna rush through this video, guys. So you can fast forward if you don't want, all this information. But I'm gonna slowly make sure I cover everything here. So and then as I go down at the bottom, then I have another one of these, the scalping indicator, mostly because I want to see the 5-minute volume. As you can see, I closed it. And this is just my way to see what happened in the last 5-minute candle, this 5-minute candle. I know other people are watching that to trade 5-minute. Again, it's helpful when you see the 1-minute close after this grid. You could just watch the clock. You don't need the grid, but the grid's here if you want it. So you can get that too. Like everything that is on this channel is free. guys. So if you like the content, please don't, I always forget to say, please don't forget to subscribe or give us a thumbs up or share. I mean, we're still fairly new, trying to gain subscribers, and we give everything for free. So, and we do a lot of live trading too. So then down here, you have another 5-minute chart. And the reason I have two 5-minute charts, this one isn't mocked up at all, is I use this to mark out the RV strategy to find pivot points on this 5-minute chart as well. Actually, this is for the Fibonacci. So this is set for, just 2 days back. So I'll set my Fibonacci high, low here on this one. I'll just give you an example. So on the RV strategy, we set 2 Fibonacci's. So remember, if it's trending down, you always start at the top with your Fibonacci, right? So that's close enough. It's 84. Again, I'm not going to trade on this. And then you go down to the low. That's your 2-day Fibonacci. Now, you can make that any color you want by editing it. You know, I usually make mine like the pink color. I don't want it to get confused with the light blue color, which is the 10-day. And then I really don't mess with anything else. But if you can't line up the prices, you can type in the exact prices right here. You can see I got close. I'm a penny off on both of them. Now that's set. And then since I did that, I'll go ahead and have the AT marked. So you mark the ATRs out first, which you saw me do on the daily, and then you mark the 2 Fibonacci. So you saw that I did that. I brought up that 5-minute. I expanded that 5-minute to do the 2-day. Now this is the 10-day. If you open this up, this is on 10-day. See? So now I'm going to go ahead and expand that. Now I'm going to mark my 10-day. You got to auto zoom, right click and then auto zoom. It's going to take me back to 10 days. I'm still on Fibonacci. So I'm going to mark out my Fibonacci for the 10-day. Same thing. You're going downward because of the way that it is. And I usually make this because of the way the trend's going. I usually make that blue. You guys have seen me do this a whole bunch of times. Now I have both my Fibonacci's up, right? So now let's take a look. A lot of lines, right? You're going, that's a lot of lines, man. Yeah, not yet. You wait till you see the rest. So within the ATR channels, because the RV strategy is range-bound trading, range-bound trading. And then you create channels within the range. So there's the ATR low. And where's the ATR high? Are we that far away from it? Or no, I passed it already. I'm sorry. Yeah, there it is. So we're right at the ATR high. When it breaks the ATR, you start to think about the escalator strategy, which I'm not going to talk about today. But that is one of the main pivot points of your ATRs. Very, very highly respected. Half of the ATR over a 14-day period, average true range, divided in half added to the close of the candle and half subtracted to the close of the candle from the day before. That seems like that might be just a random way to mark. It is not. It's tried and true, and it does represent the entire ATR. So it's not just a random way of doing stuff. So let me just get this a little bit bigger here. Actually, I don't know where we are here. Let me move this a little bit. So there we go. Okay. So now, if I had already done all my pivot lines, I'd probably be ready to trade here. Having a 1 minute where I'm taking all my moves right here. I'm looking for basically the support of these lines as well as everything else you use to scalp to help me trade. But I'm not done. So the next thing we do is we open up, this is a 4-hour down here. So we open up the 4-hour, right? So now we're going to open up the 4-hour, and that should be set for only 10 days. Looks like it's set at 20 for some reason. We'll set it at 10 days. Okay. So now what you do with this is, the 4-hour, is you mark every body and every wick within the ATR, guys. Every body and every wick. So here's our ATR range, right? So we're going to mark every body and every wick. So there's a wick. We're going to mark right there. We're going to mark that body, which actually captures that, so that's fine. This wick, this wick, this wick and body is close enough. Then down here, this wick, that captures that wick. This body is picked up by, if it's picked up by the Fibonacci, it's okay. That one is picked up by the, well, this body's already picked up. So you can see what I'm doing, right? I'm grabbing these. So actually, let me just see, why is that? Let me just, it looks like I have something here I don't want on this. Is that 5 day? Yeah, I don't know why that is here. So let me get rid of that. 5 moving average, I don't really want. Apply, okay. Sometimes I save these charts and then they get dragged over from something else I was trading. So that wick is picked up on the top of the ATR. You could pick this one up. Now you would mark these 4 hours. So you would go in so that you know what level you have, and you would say like 4H, and then you mark that out. And I usually make my 4 hours pink. I already have a pink color, but that's what I would do. If you get used to just colors, you don't need to mark them. Oh, I always know that, you know, my blues are 1 hour, my 50. So anyway, what you're doing is you start with the furthest back. Now, why are the 4 hours so important? Okay. So we went back and forth about whether we use these or not, and I'm going to explain to you why. This wick right here, this little wick, I'll mark it, is an average of 4 hours of the deviation from the close. That's an average over 4 hours. So an average of 4 hours, you want to respect. All right. So it's taken a 4 hour period, and that's what it came up with. So you've got to mark these. And then you see whether they're going to be respected or not. So it's not craziness, guys. You've seen me trade. It works. I'm going to capture that body. This happens to have a lot of them. It's not normally. Now we're right at the ATR low. So once it breaks the low, you're not marking it anymore. There's a reprieve for you. So you want to allow yourself a half hour in the morning to get this marked out. And as you start at the back of the 10 days, and then as you move up, a bunch of them are going to already be marked because they're going to be out of the ATR because they're respecting it from the days before. There's a reason why, you know. So that one hit right there, that 4 hour from the day before. So you have another one right here. So look at the difference in the channel, right? So this one is 32.28, and this is 32.39. So this is a 10 cent or 11 cent channel. So that's what we consider a small channel, not a micro. Here's another one. Now, what's going to happen is you're not going to have to mark out a lot of the other levels because you've done it here. And it's not, oh, I'm below the ATR. Okay. So, and that's what happens is you stop realizing where you are in the channel and oops. So we found through backtesting that the 4 hour, the further back, the more respected. The more that it averages out over a period of time, a 4 hour time period, the more times it's hitting. It's giving you the average. You know how I said in some of the other videos, hey, if it's within 3 cents or 5 cents, go ahead and find a mean average. If you can tap more candlesticks or bodies going across the 10-day period, you go ahead, you can move your line to get the most of them within a few cents. Well, the 4 hours already done that for you. It's done the average for you. It's meant much conversation to come up with that simple theory. So I think that's most of them. Oh, well, where am I actually? Yeah, so we're on the day. So that day, of course, wouldn't have been marked because that's the day we're actually trading. So I'll remove that drawing. So now, before we go on to the 1 hour, we're going to look at our chart, our 1 minute chart. This is the chart we're trading. So now it just made a nice little tight channel there. It tightened up this channel. It tightened up this channel. And it tightened up this channel. So it's created 3 channels by doing that on the 4 hour. Now, there's a whole way of trading it when it doesn't breach the whole channel, which I go into detail in the book. But for the most part, if it's not traversing the channel, it's a no trade. It's a no trade. You need to wait. You need to wait or you're just rolling the dice. Now, what we're going to try to do by getting to the 1 hour and the 15 minutes, we're going to try to tighten this even further so that we can really do some ping pong action in here. And with the help of the scalping indicator, it really makes a big difference. So, you know, you can get confused by these on the 5 minute and just say, this is out of control. But when you get into the 1 minute and you're really scalping and trading, you're going to feel so nice that you have these supports. And look at how many times it hits levels right around the ATR. Just that random line that you might think is random from yesterday, it respects it big time. And you're going to see that through the whole day. Same thing will happen. Big time. I mean, obviously not every day and everything. So that was that. Now we go. Now, typically I make these different colors. I'm not going to do that because this video will be really, really long. So again, now the 1 hour chart has all the same things. So I can look at the trend. This is the, actually, these are a little different. This is the ADX showing the trend and the RSI showing the momentum. Now, there's a certain way you read these depending on the time chart that you're reading. That's a whole nother lesson. But when I open these up, when I'm marking it out, you can bet I'm getting a bead on what's happening here for when I get in to scalp. Every little bit helps you. So again, this is set way too far. Is this set for 10 days? No, everything's for 20 days for some reason. All right, 10 days. So now these are just 4 of these for every 4 hour, right? So now we're looking into that. We just want to get into the middle of the ATR. We're actually just going to look in this area because we know we're over here. I'm not going to take the time to mark out the rest right now. But so now you would look at what did the 4 hour not pick up. So it didn't pick up that spike. So that's an average over an hour. This is an average, that spike over an hour, not just one time it hit there. So it takes an average. Hit it there. The 4 hour picked it up there. This one's right at the top. This is kind of close. These 2 bodies were right there. That's another. So let's see what happens over here now. Is there anything that we're missing here? So you can see that 4 hours, it looks like it's in the middle of the air right there. And this is today right here, right? So you can't mark that. But you could mark, I mean, you wouldn't see that to mark that. Well, actually, it depends on how late you're marking this out. But this hit twice right here. So that's a good spot to try to tighten up our channel. And then this right here too. So I could find a few more spots down here, but we know we're out of play. So I'm not going to do that. Now I'm going to close that 1 hour and we're going to look at the 1 minute again and see what happened. Look, we picked that up right there. Look at that. Okay, the 1 hour closed that gap. You saw how I marked it. It closed that gap. I didn't know that was going to happen, but it's like choice. This is a nano or a micro channel, which usually signifies a change, which I go into in the book, again, through massive amount of testing. So we still haven't picked up this. So it looks like the 15 minute might get this week, I can hope. And then we'll create some tighter channels. And it's really not hard to trade these when you're in the moment. When you're watching this move, you're going to be really happy you have these. I'm defensive about this a little bit, guys, because people who haven't seen it traded or haven't tried it, they don't understand. I'm noticing now 2 other popular YouTube channels, and I'm happy to see it, are literally copying the exact same thing I'm saying here. They're not calling it the RV strategy. They're suddenly saying support and resistance lines and why they're there. And these are the same people, and you probably can see their earlier videos that said, don't mark up your charts. So they understand, you know, there's always a new way to trade, right? There's always new, and range bound isn't new. I mean, come on, finding a range and then trading within that range, that's not new. The RV strategy is new because it takes it another level. Now, the lines I'm marking out are pivot lines, I call them, based on the wicks and the bodies, right? Where it turned around before over a 10-day period. When we get into the escalator strategy, I go back 90 days. But within a 10-day period, that stock has turned around for whatever reason, pivoted and changed direction. Making note of that is just smart. It's just smart. Will it do it again every time? Absolutely not. It will not do it again every time. Of course not. But it might do it, we think, between 25 and 35% of the time. And when you get to it, every resistance or every line that you're going down to is a support, and every line you're going up to is a resistance. So it's a floor and a ceiling, and the book really explains how to trade these, how you're getting prepared to either break out through and hold your position, or take your profit. Reverse is advanced trading. It goes into in a chapter where you can reverse. But if you just want to take your profit at the floor or the ceiling, if you're going short, that's the move. You don't need many of those trades to have $100, $200, $500 a day and change your life. So it does make sense to have these support and resistance lines. They're there because the stock has told you it's going to do something at those levels multiple times in the recent, past. So that's just common sense. It's not a genius thing. What we discovered with in the $1 Million Margin Club, with the advent of all the additional day traders coming in COVID and stuff, patterns that weren't as well respected, the percentage of the patterns that are which we're rating now, which patterns are more respected, candlestick patterns, it went way up, right? It's a self-fulfilling prophecy because more and more people react to the pattern. Well, we noticed that in range-bound trading, that more and more people reacted to support and resistance lines, however they determine them, whether they be on trend lines, which is a whole nother strategy. But more and more people respected these lines. And then that's when we discovered that there was a strategy in the middle of the range bound that could be tightened up on and used for scalping, because we're scalpers. And scalpers, you want to get in and out and then be done for the day and not have to worry about your position, right? And I'm not saying don't do long-term trading. Please don't send me nasty emails. I have long term trading positions. I do. I'm just saying, like, for the most part in your account, your day trading account, you don't want to be worried, right? Go on about your day and have a great time. So let's go into the next one I would go into is the 15 minute. So this is the 15 minute. So it's going to be wild. Let's make sure to see how many days this is set for. That's just set for 1 day. Odd. So we'll go back 10 days on that. Now, let me auto zoom. Now we know right now I can take less time to mark this out. They were up in this area here, so none of these I have to look at. So I'd start by looking back here. I'll zoom in on those days, those times, and see, have I missed? Yeah, look at this. These aren't picked up. So here you go. So I'm going to pick those up right there. Look at all those taps right there. So that hit a whole bunch of places. All the way back in here, this one hit. It's a little lower, kind of right in that area. So now we just picked up two from way back there. This is pre-market, and then these got picked up, which is great by the 4 hour. This is pretty tight. You wouldn't worry about those. This I might get, though, because that's a turnaround. Oh, wow, look at that gap. Because I thought I was on the wrong day for a minute. All right, so let's do that. Okay, now let me go auto zoom again, and we'll go back over here closer to where we are. And that's how you do it. Just get up to where before the day started. Look at that. It's out of control, right? That's what you think. We have a spider web. But you're zooming in your eyes. Now we're above the ATR here. Did I mark some of those a minute ago? Okay, well, if it's above the ATR, it doesn't matter. Nothing here. There's nothing we haven't picked up. Right here is a little bit, but look, it gets picked up by the Fibonacci. So you don't have to get it. So the Fib picks up these too, which is great. You don't have to get it here. Really not seeing anything that we haven't picked up on. So this is really tight. And that's what happens as you go along. They're already picked up. So now I could probably find some down here, but I'm not going to do that because we know it's not down there. So that's it. So did we manage to pick up this? We haven't. So then the last thing you do is you pick it up on the 5 minute. So now we go on the 5 minute and we go back to this should be set at, how many days is this back? 10 days, yeah. So we're going to go back 10 days. I'm going to auto zoom. Now we have 10 days back here. So let's look to see here if any of these 5 minutes didn't get picked up. So we're all the way back here. So here's the ATR low. So it would have to be like right here for that batch. So ATR high. So okay, so here you go. Here's some right here. Oh, that got picked up by price line 22. Then over here is a turnaround. Is that picked up? That's price line 26, gets that. Then you've got over here, that's not marked. Okay, so there's one. That got hit 4 times right there. All right, so let's get that one. This is a turnaround pre-market. Does it get supported? It does, although it almost gets picked up by 28. I'll go in a little higher there to get those across. I'm going to tell you one of the last things that really makes a difference when you get into actually trading. So now here's our day. There's nothing in the middle here. So now I'm going to zoom in right where it matters, right to there. And we're going to go into see if there's anything else here. Oh, we're past the ATR there. So some of those wicks blew by here, not enough to call it out. Most of these are just picked up. They're so perfectly picked up now that you don't have to do it. Now some might argue if you make enough lines, you'll pick up everything. Yeah, there is an argument there, I suppose. But there are these gaps here. So now that one is a possibility right there. That's and it hits over here to a big sharp wick here. It hits it again over there. As I'm going across here looking at it hit. So I guess I would try to pick up that. I might get it on the red, though. Is the red better? Yeah, that's right there. That hit right there 3 times. Hit there on the green. So that's about the best I can do here. So that's it. I don't know if any of those helped us over here. Yes, they did, didn't they? Did they tighten this? This looks like they tightened this up. Maybe not. No, maybe not. Maybe that was the gap still. So now, what do you do in a situation like this? Because if these don't make it to the bottom, like you're over here, say you don't see any of these. You're right here, and you've made a successful trade right in here. This told you, this micro channel told you, get out or go short. But if you got out, you might have gone short down here because that would normally be the play, and then it didn't make it, right? Then it went back up. It maybe didn't shake you out of your position yet, and it went back down. You're still holding if you got in here. And then the same thing happens again. You're still holding. And then the same, if you're red up here, you're very little red if you were going short. And then it happens again, and it still doesn't do it. And then you might have a losing trade by getting out way up here. These are like non-tradable things. If there was an indicator here, you might have made your move based on thinking, look, because look, it tapped here, tapped here, tapped here, and then as it goes on, it continues to respect that line. But what you do is you go back on the 5-minute, say, so we don't start trading till 10 o'clock, right? On the RV strategies, a 10 o'clock trade. That's what we recommend anyway. So now you go back on the 5-minute, and you also do this on the 1-minute, and you see, is there spots here? The 5-minute there are not really. There's nothing to mark here. So I would stay away from that. So then I'd go back to the 1-minute and see, do I have an area here that I could have picked up that could have told me? So it's stair-stepping straight up. So the answer to that is no. None of these movements here until it came back down to it. So the only way to mark that out, and you will see me do it trading, the only way to mark this out, this channel here, is to watch it happen like the second or third time. I probably would have marked it by this one for sure. I would have put something here and said, look, that's the third time. And it hit here. It's like I'm gonna mark that and see if it comes to that level again. And then that became tradable. Just one candlestick, but I'm continuing to mark support as they go along. I probably would have marked this too. This area, because the bottom of that, and then here, probably would have marked that in case it came back down. So you'll see me continuing to mark as we go along. Now, if you haven't seen this traded, this looks nonsensical. It really does. Sometimes I wake up in a cold sweat in the middle of the night and go, what is this? But when you trade it, you really get a feel for it. You really, over time, you get a feel for it. So guys, that's basically how you mark out for the RV strategy. Now I'm not going to go into live trading when on demand. So on demand is, you can see it's got a brown line around it, has that. There's some questions over time about that. This is clearly a simulator. The other simulator is called paper trading. It has a bigger delay and stuff like that too. It's hard to trade in these simulators, but it's not. This is good to go back and trace. I know some people are looking at my trades and they want to go back and see and then retrade them themselves. That's great practice. I used to watch all the videos and of my own videos. I don't have the time anymore, but when I first started scalping, I would go back and I'd watch them to just analyze everything I did to try to get better and better and better. And it's really the smart way to trade. It's really what you should do. I highly recommend it. To learn. I'm trying to think of what I haven't covered here today. I'm rambling on, but I showed you how I mark out the RV strategy. I talked a little bit about how I might trade it. You'll see the live trading videos, and I will be showing the book if you can't afford to buy it. The book's going to be cheap, but for some reason, if you can't get it or can't afford to buy it, I will be going through the pages, and you can learn everything for free. Okay, so we're not about that. Okay, we're about paying it forward. Oh, one of the other things I didn't point out right here, this is the simple moving daily average. This is a script you're going to get as well when you download this entire layout. And this is showing you the daily average, but on a 5-minute chart. So when you start out trading, you want to take note of this, like this one, 134.92. Did that level get marked out? I don't think it did. So that's another thing you want to look at, because that's a daily moving average there. 134.92 is like right here. Wouldn't it be funny if that picked up the line we were looking for? Let me go to the left of that with that. Did that pick up on our 1 minute? No, I guess it didn't. Okay. It was just, no, because that's down here. Anyway, so that's, I think I've covered everything I said I was going to. Remember the big thing was the Tradingview in the beginning, and I'll be doing some more videos I've already done a whole bunch of live trading videos that I'm going to put out with these, but I wanted to get the Tradingview thing out, and I thought I'd cover this layout at the same time and then go over some of the questions on the comments were more and more about how do you set up this RV strategy. So it looks confusing, I know. Again, I keep harping on it, but if you go into the actual what you're trading on a 1-minute chart. So enjoy all these free scripts, guys. Enjoy the free layout. Hopefully it'll download for you. Oh, another question I get a lot is, what is my what is my application settings? So this look and feel, this is what I do. This is old school setup. This is how I get my level 2 to look this way. Okay, I know that's a lot of questions. I have mine on large for recording, and then you saw I have so many saved layouts, they'll confuse the heck out of you. So you don't want to try. And then when you get, another question I had, I'll answer this question. So somebody said, how do I get the DTS? So these scripts, day trading for sec, they're not on Thinkorswim. These are custom scripts. You're gonna get the ones that are on this layout, but no, you have to get them first, and then they'll be in your system. They'll be in your system to pull up whenever you want. But you're gonna have to get them from this layout first, or the individual videos. So I know a lot of you are new, didn't understand that, but that's how that works. That looks like too many lines. I know that grid that he gave me is just like, oh my God, just want more stuff to look at, but it is very helpful. I've been using the heck out of it. So again, thank you for that. Thanks for all the help for the community, guys. Thanks for watching. Don't forget to subscribe. We got a lot more coming, a lot more strategies coming out that we're all working on. All right, stay green out there, guys. Thanks for watching.